move on, MSCI had announced a list of additions, deletions as a part of the May index review. The adjustments come into effect tomorrow. Vivek is here to give us a recap of all the changes announced in the MSCI Global Standard Index and the MSCI India Small Cap Index. Vivek.
Well, that's right. So at least for a day tomorrow, you might feel a selling pressure actually abate, given the fact that India's weightage as far as the MSCI Emerging Market Index will now rise to a historically high level of 18.8%. Tomorrow, expect to see inflows of over $2 billion just in the last hour of trade, on the back of these MSCI ETF flows. Now, we've already highlighted this list of stocks, earlier in terms of which are the ones that are entering. But since tomorrow is the day when the actual adjustments will take into place, highlighting them once again for the benefit. Now, talking about the list of stocks, 13 additions and 3 deletions from the MSCI Global Standard Index. So Bosch, Canara Bank, Industar, all of these stocks also come in. Jindal Stainless, JSW Energy, Mankind Pharma, NHPC, PB Fintech, flows of almost $232 million in PB Fintech, Phoenix Mills, Solar Industries, Sundaram Finance, Thermax and Torrent Power. All of these stocks enter in, the highest flows coming in as far as PB Fintech is concerned. On the other hand, 3 stocks will be deleted. So Berger Paints, Indraprastha Gas, as well as 197, that is Paytm, come out. All of them will see outflows in the range of $50 to $100 million. Apart from that, in the MSCI India Small Cap Index, there are almost 28 additions and 14 deletions. So those stocks too will be in focus. There will also be some rebalancing in terms of weightages. So on account of all of that, total net inflows that India could see tomorrow in the last hour would be a little over $2 billion in the session.
So this is all as if closed yesterday, right? As tomorrow.
As of close tomorrow,
Vivek, right?
That's right. Last hour.
And in terms of stocks that you mentioned, have usually there is pre-positioning and stocks run up and they correct. I mean, all of that has happened here, or is it anything you would like to highlight in terms of a name or two?
Let's just look at the process, that actually is undertaken. Now, this particular review, happens every quarter. So a little over 2 months before this particular event takes place, quant analysts already start making their analysis and they start pitching it to their clients. So a certain amount of pre-positioning already happens. After that, there is an MSCI cutoff date, which will be at least a week or so before the actual date in which MSCI announces the review. After that, there is depending on the stock price, the list is further pruned, and post that, MSCI announces this also well in advance to the actual date of adjustment. So in most cases, it's very safe to assume that the pre-positioning is already done, and tomorrow will be the day in which the actual ETF flows comes in, but the active funds, that play for this particular event would probably be already out of this particular trade by then.
Well explained. Thank you, Vivek, for that. Let's move on and talk about Cummins. That's one.